journal to both the general ledger accounts and the accounts payable subsidiary ledger. Fourth, we will prepare a schedule of accounts payable to ensure our detailed records match our overall control accounts. Finally, we will demonstrate a working knowledge of the procedures for effective internal control of purchases, ensuring that a company's assets are protected from fraud and mismanagement. In any successful business, not just anyone can start to use for merchandise intended for resale, not for buying office supplies or equipment. Because it functions as an expense account, it has a normal debit balance. Often buying merchandise involves shipping costs. You have probably experienced this when shopping online. The price of the item is one thing, but the shipping fee adds to your total cost. Businesses face the same reality. When a company pays for the transportation of the merchandise it buys, it records this cost in an account called Freight In or Transportation In. This is also an expense account with a normal debit balance because it increases the overall cost of the merchandise purchased. The responsibility for these shipping charges depends on the shipping terms. If the terms are free onboard shipping point, the buyer is responsible for the freight costs. If the terms are free onboard destination, for the purchases expense account, you would record a debit of $1,000. For the freight and expense account, you would record a debit of $100. Finally, for the accounts payable liability account, you would record a credit of $1,100. As you can see, our total debits of $1,100 perfectly match our total credits, keeping our accounting equation in balance. Journal to both the general ledger account and the accounts payable subsidiary ledger. Fourth, we will prepare a schedule of accounts payable to ensure our detailed records match our overall control accounts. Finally, we will demonstrate a working knowledge of the procedures for effective internal control of purchases, ensuring that a company's assets are protected from fraud and mismanagement. Fourth, we will